Yeah, hi there. This is Bernhard Koepp from CJ Lawrence. Well, it's been another interesting week. I mean, we started the week very volatile and continue to trade down, given all the controversy with the tariff war between the U.S. and China. We basically ending the week here flat, which is I think a victory. Little bit of an update on the tariff issue. The next date that we're looking at is the G20 meeting, which is in Osaka, Japan. That's on June 28th, and basically the tweet from the Trump administration has been that the Chinese premier and Trump will meet at that date, and hopefully they will come up with something meaningful by then. I mean, the news we just got now was that they're a little bit of an impasse, so they're figuring out when to meet next. But we basically have another month here, or a month and a half to worry about this issue. On the Canada deal, I mean, that was signed or agreed to today. That's very promising on the whole tariff front. Basically, they've agreed on steel tariffs and so forth. That's very important in the car industry, and it's interesting. They carved out cars in the tariff warfare, where they're saying cars are exempt for another 6 months in this tariff war. Cars are the most impacted by supply chains, global supply chains. So if you think about the typical car that is designed in Detroit, the parts are produced in anywhere from Canada to the U.S. to Germany to Japan. These parts are then partially assembled in the U.S. and then again shipped to places like Mexico, where the car is again partially assembled to put the drivetrains together and all these things. And then for final assembly, it goes to Detroit. So anything that disrupts the existing supply chains based on these tariffs is really damaging to the auto sector. So the other data point we got today on macro was consumer sentiment, and that came in surprisingly high. That was like a 102. That's a very high reading without any doubt. Obviously, the U.S. economy is very much dependent on the consumer showing up. If you think about the GDP number we got in Q1, which was 3.2%, there was a lot of inventory build in that number. So economists are worrying a bit: are people going to show up to actually buy that product? And a lot of that purchasing that we saw on inventories was actually because of tariffs, we would argue. But it kind of underscores that we're not worried about a recession. So that's why we actually we like stocks a lot here. Low inflation, productivity growth, interest rates on hold, all that is great for stocks. So on the sector side, we saw some interesting moves today as well. Technology stocks rallied big time in the middle of the week, and that was a number of factors. They were pretty oversold after the last couple of weeks. But you also saw some evidence that actually more non-traditional investors in technology stocks, like Warren Buffett, was shown that even his portfolios were starting to buy things like Amazon. And we got some detail on hedge funds that they're also buying technology stocks. That's actually very supportive for the idea that we have that you want to stick with these larger kind of growth companies. The other sector we would highlight is healthcare. Healthcare has kind of been also out of favor given the election cycle and politicians here talking about drug pricing and all these good things. Interesting. So healthcare did very well this week. There's a big hematology conference and oncology conference coming up in June, so a lot of the heavy hitters in research and development started publishing their reports on Wednesday. So there's quite a bit of a buzz, especially in cancer-related treatments coming out of these companies. So you're seeing a bit of a bid under healthcare stocks which is a sector we like a lot. IPOs was very interesting in the last week. So we obviously saw Uber a couple of weeks ago, which was, people say it was sort of a failed IPO, which is a bit of overstatement given how much money they raised. But, that stock is down about 20-25%. Then today we got a Chinese IPO, which was Luckin Coffee, which is up about 20%. So it's interesting, how these two companies both actually don't make any money. They have no net income whatsoever. But the coffee business is an interesting place that we like a lot as well. We obviously like Starbucks coffee a lot. If you think about global coffee prices, they're really at an all-time low. And last time I checked, I'm still paying $4 or $5 for my coffee there. And it's an interesting factoid. So a lot of growth is obviously in China for Starbucks and Luckin and others. So the annual consumption of coffee in China, that we learned this from the Luckin IPO, is only 6 cups of coffee per year per person. So in terms of here in the U.S., it's 388 cups of coffee per year. So if you think about China as a coffee market, this is actually a huge growth market. So that's it on the week. Just one more thing. Our team is taking part in the Future of Everything conference next week. This is a conference that's being organized by the Wall Street Journal, which has leaders from technology, from all sorts of parts of society, really forward-looking into the future of technologies and what's going on, which is very important to us, because if we're going to stay current on growth and where to invest in the next decade or two, we got to be in front of that. So we'll report on that next week. Have a great weekend. Take care.